Hello. Welcome to our next chapter, that is payment of tax. So there are some words that I need you to know before we start this chapter, and pause this video and just like this video. It helps bring it to the recommended of more students so that more students can benefit, and it gives me also motivation to make more videos. Okay, so let's start. If you like the video, please just it will take 2 seconds to like the video. Okay, so let's start with what words and what they are. So first is your CPIN. So CPIN is your common portal identification number. So this is created on successful generation of a challan. So once you've successfully created a challan, you will get a CPIN number which is 14 digits and has 15 days of validity. Okay, so the CPIN number has 14 digits. Now, CIN is your challan identification number. That is when you generate a challan. So it is generated by bank on successful payment of challan. So when you have created a challan, you get CPIN. When you have paid the challan, you get a challan identification number. Now this challan identification number is of 18 digits. That is 14 digits is of the CIN that was generated, plus 4-digit bank code is added. So that this means that your challan has been paid. And next is your BRN, that is your bank reference number. So transaction number given by bank for payment against a challan. So this is given by the bank itself, that is your BRN, since it is called also bank reference number. Okay, small chapter, don't worry, nothing to worry. See, this is where the chapter ends. This is whatever you are seeing on your screen is the entire chapter. Okay, so manual and physical challans are not allowed, and each challan is valid for 15 days. That means challan has to be generated electronically only. Date of credit in treasury of government is deemed to be date of deposit and not when debited from bank. It might be possible that the amount has been debited from your bank, but it might be deposited within the government's account due to any transaction issues, maybe after 2 days, 3 days, whenever. So whenever the government receives it, whenever it is credited in the treasury of government, that will be deemed to be the date of deposit. So for any calculation of late payment or when the payment has been received, you have to check when the bank has received the amount. Next is amount in cash ledger, that is any major or minor heads. So these are your major heads and these are your minor heads. Can be used to settle any major or minor head in liability ledger. So earlier this was not the case. You had to use only one head against the liability of other head, which now has been removed. So you can do mix and match in any way. There are basically 5 major heads, that is your IGST, CGST, SGST, UTGST, and any cess that you have paid. These are your 5 major heads, and each 5 major head has more 5 minor heads. So basically, you see there will be 25. That is, IGST will have its 5, then CGST will have its 5, this will have more 5, and this will have more 5. Okay, so basically, there are 4 major heads and 5 minor heads. Sorry if I said 5 earlier. There are 4 major heads. SGST and UTSG are in the one only. So minor head, that is your tax, interest, penalty, any fee and other. These are your minor heads. So how do you remember this? This is your tip 4. Okay. So tax, interest, penalty, fees and other. Tax, interest, penalty, fee and other. This is your tip 4. So if there is a delay in payment of tax, so earlier there were two types of interest rate, 18% and 24%. Now both of them have been done to 18%. So delay in payment of tax, so only on portion paid through cash ledger and not credit ledger, that is after adjusting ITC. For example, your total tax liability was 100 and you already had 30 rupees in your ITC as credit. So you only added extra 70 rupees as cash from in your cash ledger and then you paid this. So the interest will not be on this 100. It will not be on this 100. It will be only on 70, because I said that boss, this 30 rupees to you already had. I am only apportioning it right now. So only charge me interest on this 70 rupees, which also makes sense. So it is after netting of your ITC. Okay, and any excess claim, that is percentage utilization of ITC. If you've taken any extra percent or any excess reduction in output tax liability, which you were not allowed, in such a case, interest will be charged at 18% per annum. Remember, this was 24% per annum earlier for this part. It was bifurcated like this. This was 18 and this was 24. Now you have to remember it is called 18% only. Okay, now you have to understand what debit credit in each ledger means. So in electronic cash ledger, please try to forget your accounts and pay attention here. So in electronic cash ledger, if you say you are debiting, so electronic cash ledger will be debited when it will be debited on payment of liability, interest or penalty. That means when it is going out, when any amount is going outside electronic cash ledger, that means you are debiting this account. And when any amount comes inside this ledger, that is amount deposited in ledger or any TDS TCS claimed, in such a case it will be called credit of cash ledger. So your cash ledger will be credited when it increases and debited when it decreases. Okay, so any miscellaneous points is summary of all deposits and payments made you will be seeing in your cash ledger. Amount can be deposited through your NEFT, internet banking, credit card, or your OTC. Okay, now your OTC payment maximum is 10,000 per challan per tax period, that is over the counter, which can be made through cash, check, or your demand draft. Okay, so these are your miscellaneous points with regard to cash ledger. So cash ledger, if you see cash ledger, when cash increases, you will have to credit it. When cash decreases, you will have to debit it. Okay, so if you want to make this arrow, you can make this for debit and this for credit whenever it increases. Okay, now next is your electronic credit ledger. Electronic credit ledger, you will debit when utilization of ITC against liability, that is whenever you utilize. So of course when you utilize, your credit will go down. Suppose you had 100 rupees as ITC and now you are utilizing 30 of it, it will go from 100 to 70, correct? So whenever it is decreasing, you will debit. So D for decrease, D for debit. And input tax credit as per return, whatever credit you are claiming. So when you claim, it will credit. Okay, so claim is credit. C for claim, C for credit, and D for deduct, D for debit. Okay. Now next is your electronic liability ledger. Electronic liability ledger, when it will be debited when amount payable towards tax, interest, late fee, etc. So that will be debited to your liability ledger. That means how much is payable, how much you have to pay. And on payment of liability or utilization of ITC or electronic liability will credit. That means your liability will reduce in such a case. So both these cases, electronic cash ledger and electronic credit ledger, both of these increase when credit, and electronic liability ledger will decrease when credit. That means when you are making the payment, when you make the payment, your liability will decrease. Okay, so therefore this means this is a downward arrow. Miscellaneous point for electronic credit ledger: credit availed on inputs, that is of course shown in this ledger, can only be used for payment of tax. Only for payment of tax. What does this mean? Only this payment is allowed. Your interest, penalty, fee, other, this cannot be paid through your credit ledger. It has to be paid only through your cash ledger. I hope this is clear. You can only pay tax, cannot be used to pay tax under RCM. So your RCM also has to be paid through cash ledger. RCM cannot be used to pay against your credit from your credit ledger. And last, under your electronic liability ledger, total tax liability of a taxpayer. This shows that how much is your total liability. So chronology of discharge of liability. For example, your liability is of 100 and you paid only 70 rupees. Now this 100 might have some tax, some penalty, some interest. So how this 70 rupees that you paid, how will the government treat this? As that this 70 rupees you made payment towards what? So this is the order of payment. So first is self-assessment tax of previous period. Anything that is remaining from the previous period, first they will set it off against that. Second is self-assessed tax for current period. That is next, it will be your current period. Now you remember these are both only tax. And in the end is your other amount, interest, penalty, fees. Only in the end will that be apportionated. Okay, so first is your tax liability previous, next is your tax liability current, and in the end is your interest, penalty, fees, others, etc. Okay. Registered person may transfer any amount of tax, interest, penalty, or fee in electronic cash ledger to IGST or CGST of a distinct person. Okay, and with this we are done with our chapter payment of tax. I hope this chapter was easy, nothing much to worry about. And in the next class we'll see our chapter return. So I've made this in a table format so that it is easier to learn.